Alright, so very quickly also, I wanted to give you an update on the US dollar versus gold and also silver. The reason for this is because, as it appears, the US dollar is on the precipice of taking a pretty mammoth dip to the downside. This is continuing from what has been an extremely bearish 2017 and also a very weak start to the beginning of 2018. The reason for this video is because if you look structurally at the US dollar, you can see for yourself there isn't a lot of room really holding up the US dollar from these current levels. The only thing bullish about this chart at the moment on the weekly time frame is that we are setting up that of a hammer candlestick and a hammer at support, and we can call this an area of support because we have bounced very close to this general vicinity in the past. Is that this candlestick, of course, derives its meaning at a support level. It is a very early reversal signal, and this is really best surmised from this long lower wick on the weekly candlestick. I'll zoom in so you can see this, but again, this long lower wick is indicating buying pressure on the weekly time frame. Now, again, if we are to crack this level definitively from where we are, we're looking at the US dollar very quickly and suddenly moving down to about 88, or the handle of 88, which is a pretty mammoth move because more or less we are sitting at or very close to 91 at the current juncture. So pay attention to the US dollar. What I can say is that, look, if we see a break below the low of Wednesday's candlestick, and this of course being yesterday, if we get any major move or any flinch below about 90 into the 89 handle, the bottom is going to fall out of the US dollar until we reach support, the next logical support being 88. Now, as I say this, we're really sort of bifurcated at this particular time because as it stands, once again, we're on the precipice of a cliff, potentially falling off it until we move down another 2 to 3 cents. However, we do have that weekly hammer candlestick at support, and we do have, of course, these two candlesticks. On Tuesday, we printed a doji, and during yesterday's session, we have that of a reversal candlestick. The weekly lower wick is most derived or entirely derived from the intraday reversal, which took place on the US dollar yesterday. We do have a pretty decent white candlestick again. If we go into different time frames, this is very similar to a hammer candlestick on Wednesday, but on the daily time frame. It's not a textbook hammer, but it is that of a reversal signal. Now, over the past number of months, I mean, personally, I have been relatively bullish on the US dollar. The reason for that is because we were looking at divergence, and this is positive divergence, which was beginning to set up in the months of August and also September. We went through potentially that of an inverse head and shoulders over here. You've got the head and then the left shoulder and the right shoulder. We broke out above it. But since this high point, and this is in November 2017, we've been making a series of lower highs and also lower lows, which is best surmised, of course, to the current juncture where we've just printed that of another subsequent lower low. However, what I want to point out to you at the moment is that the divergence that we were looking at, which originally gave us suspicions of a reversal in the US dollar, is actually expanded now. And if we take into consideration the ultimate low on the MACD, which is going to August, if not September, which originated the divergence, but instead of taking these two peaks, if we start expanding this out over to really 6 months as to where we find ourselves now, we still have that initial divergence forming. In fact, the divergence which established itself in August and September is now a lot greater and a lot larger, and really divergence with the MACD derives its meaning, or at least it's more significant, more important, it is more telling, more pertinent over a longer duration. So if we are to see that of a reversal take place here, and just say for instance the US dollar strengthens and you see the MACD turn up from pretty much these current levels, well then we have some really severe, very strong positive or bullish divergence, which may still form the nucleus of that of a rather positive US dollar for the year 2018. This is all under suspicion at the moment. Nothing is confirmed. We are at a turning point here, however. We either break down from this point or we start to see the US dollar strengthen, break above this swing high over here, and also take out these two past subsequent swing highs as well. So why is this important for the US dollar? The reason for this is because as it stands, gold is at a very important pivot point as well. We've seen a pretty strong bounce in the price of GLD. It was very bearish towards the first half of December. We sort of turned on a dime prior to hitting our target down here at 116.44, and then we've moved all the way up to 127.09. A lot of people took the bullish trade at 123 up to 127. Congratulations if you did that. Personally, I didn't. But when it comes to gold, and when we talk about fractals, different time frames, we've got either the minor level, the intermediate, and the macro level. The macro level at this particular time, it's still to the downside. If I move this into a line chart and zoom out to 2011, you can clearly see that on the macro level, we're still making a series of lower highs, okay? Even though that was a really bad illustration on the macro time frame, there's not enough evidence to really suggest that we have reversed the macro trend. But what is interesting is that as the US dollar again moves down into that pivot point that we're currently at, gold is at a resistance point, a very important resistance point. We were about last here in the month of September 2017. So what this means is that if we break above this swing high over here and get above 128.54 on my screen, this is going to coincide with the US dollar actually tanking below that 90 handle, which is what I've already spoken about. Now, on the counter side, if of course the US dollar bounces, if these hammer candlesticks on the weekly time frame are legitimate, mixed with that bullish and positive divergence over the 6 months, okay, the 6 months with the MACD that I've already walked through with you, and if that is to be proven correct and confirmed, well, then what you'll see is that over the coming weeks, if not months, gold is going to rotate pretty much from these current levels at this resistance pivot that we're respected since Friday last week, and then we should see, of course, the low of gold taken out over here. So as it stands at the moment, I'm really sort of neutral on the US dollar. I'm also neutral on gold and silver. I have been bullish in the past for the dollar. It's now soured a little bit into that of potentially a major bearish move. However, we do have very early signals that this might be the low, especially the candlestick yesterday, which is indicating that we could see a bounce. Now, the bounce is something that we don't know how far and how long it's going to last if it comes. We'll have to monitor it. But at the moment, it is rather premature, and it's really something that you shouldn't be acting on or taking a lot of chance on. In fact, you'd rather let the technical detail really establish itself a little bit more until you have enough information. Even I myself have enough information to really place that next trade on gold and, of course, the US dollar. The same is true for silver. What I just explained with gold is also applicable to that of silver. In fact, silver has been drilling up into this resistance point. This isn't going back to September like gold. I mean, if this was the same as gold, silver would be up here around 17, if not just above the 17 handle. In fact, it's down at the 16 handle, almost back into the 15s. It looks as though we have potentially a little double top. So if you see the US dollar bounce and silver crack about 15.90, there's a good trade down to about 14.80. However, just like I said with the individual trade setups as well, when you see these double tops, generally the best thing to do is to wait and allow for the back test, and then this is where you get into the trade setup if it is to actually play out like this, okay? So again, these are trades which are forming. We don't have enough evidence one way or another at the moment, but it's certainly something worth following because it is going to throw up a pretty decent trade setup just when we have enough information. At the moment, we're speculating a little bit as to the direction of the US dollar. Again, I'm not convinced either direction at this particular point, but if we see some rather material movements in the US dollar, then I will keep you updated, of course, on what that means for gold and silver as well, and any potential trade setups that are going to come from that as well. So on that note, that will end this Wednesday market recap. It is Thursday morning where I am. We're about to open trade for Thursday. We'll see what happens in these markets. If not, I'll see you in pro over the weekend come Saturday. All right, so all the best, everyone. Enjoy the rest of your week. It's James signing off on behalf of Pivot Point Trading. Farewell.